All right, good morning, everyone. Let's get a quick sound check going in the free room. Make sure we are good to go. Good morning, Cheryl. Good morning, Earl. Tom, Russ, Lorna, Eric, Mirza, JK. All right, we are good to go. Hey, Stitch. Hey, Jim. All right, folks. Well, I'm kind of sitting here wondering, was that the pullback? Was that all she wrote for the reversion to the mean? And I think sometimes, at least for me, we like for things to be exact. So you get your squeeze back here, squeeze fires to the upside, and then from there you look for that reversion to the mean. Now sometimes it'll actually come down and give the moving average a little smooch. But frankly, we got to we got as low as 43.27. Daily 21 EMA is about $10 lower. So as a general statement, we've gotten the reversion to the mean. And now the question is, do we just kind of turn the corner and go right back towards the highs? And you're seeing a lot of this. Check out the Qs here. And yesterday's action was a pretty impressive pump. So for the Qs here, right, big push. You come within a stone's throw of that 21 EMA. And pretty impressive. So on Monday, the indicator went neutral, which usually means to me, all right, we're finally going to take a chill pill. As long as you have that daily buy signal, everything's kind of pointing towards the that continued push into higher prices. When you pull back to a 21 and the indicator goes neutral, usually you're going to hang out for a few days, and usually you'll get a brand new squeeze. But pretty all right, let me log back in. Anywho, but pretty impressive. Little bit of a short squeeze kind of push yesterday, and they get another daily buy signal. So I think here's the thing to watch for today. Kind of the nature of the short squeeze. And yesterday felt like a short squeeze. If you looked at the internals, you looked at the ticks, you looked at the advanced decline, and then even if you looked at, say, the 5-minute chart, QQQ goes, we'll call it 359. QQQ goes $5 or $6 without actually testing that 5-minute 21 until the end of the day. So the nature of the short squeeze is everyone gets trapped short, everybody begins to panic, and then from there we get these explosive and these spastic moves. So to me, what I would like to see from here is how does things hold up on a decent flush? Because you've kind of seen this a few times where the market will flush, shorts get a little bit trapped, so you get that big pump, and then they kind of drop the ball. Right? So we roll right back over. Again, the shorts get trapped. We get the short squeeze. What I'm trying to figure out is, does that short squeeze then lead to continuation of a trend back towards the upside? And what that would all look like is on the first decent pullback, could be a 15-minute 21, could be the 30-minute 21, could be the hourly 21. But does the structure start to look more like an uptrend? No, that doesn't look like an uptrend. Shorts get trapped, they get squeezed, we go right back down. So I think with a little bit of patience here, wait for some sort of dip, see how the bulls handle that dip. And then if the indicators are all lined up here, that might have been all she wrote. Might have been all she wrote. So if you start looking at a few of the, the handful of names in your leadership right now, they're all kind of getting back to an interesting spot. Most of them have made that reversion to the mean, or close enough. So Microsoft here. Nice push. Pull back to the 21, and now we have a brand new daily squeeze. So guys, there's a good chance here. 1, 2, 3, 4 weeks down the road, we're looking up And out of this daily squeeze, Microsoft has taken out the highs. I think a pretty good chance. Google. Admittedly, Google a little bit sloppier. But if that's all she wrote as far as the selling pressure, Google could actually be pretty explosive. Printing a brand new daily squeeze. They came down, they tested the 50. So this daily squeeze could have some of that slingshot potential where the squeeze prints. They kind of paint the picture of that squeeze buying the fire short. All right, so come on in, everybody, buy your puts. The water is warm on the put side. But if this can snap right back above that daily 21, that should catapult it towards 130. Right, so that could turn into a great trade. You have NVIDIA here. Now the semiconductor names are going to be down a little bit. Some sort of news last night. So let's see. We're going to open up around 405. 405, I think, is a good spot to look for an entry. But here's the kicker. Whether it be the S&Ps, whether it be the QQQ, Microsoft, NVIDIA, etc. What you want to see here above that 21 EMA from your path of least resistance indicators. So whatever you're using to gauge momentum, whatever you use to gauge the quality of the trend, whatever you use to gauge the structure, the key here for a push off that 21 EMA is all of your lower time frames shaping up in a bullish fashion. So for example, say you use the 10x bars. What you would want to see here for a push off that 21 EMA from the daily chart would be green 10x bars on the 5-minute, the 15-minute, the 30-minute. In my case, of course, it's the big 3 indicator. But here's a few examples of the template, so to say. So this was from last week. So last week, you have Mara here in a daily squeeze. You have your daily buy signal. And very much like SPX, QQQ, NVIDIA, Microsoft, etc., you're trading right near that 21 EMA. So the combination of those 3 things, we have a daily buy signal. Right. So my path of least resistance indicator is bullish. We're near the buy zone, and we have a daily squeeze. What those 3 things do is just set the stage for a push higher. What triggers that push higher, what's going to be the fuse for the push higher, is when everything inside that daily chart is fully aligned for a push higher. Your daily squeeze isn't going to fire long if your 4-hour, your 2-hour, and your 30-minute charts are bearish. They're breaking structure, momentum's rolling over. This is what it should look like. So for Mara here, daily squeeze sets the stage. 4-hour, 2-hour, 1-hour, 30-minute, 15-minute, 5-minute buy signal. That tells me everything's fully aligned here for that push. All right, and from that alignment, the following day, we got the push we were looking for. We bought it here and we took it off there. Another example would be Pinterest. Daily buy signal above that 21 in a daily squeeze sets the stage for a push. When the 4-hour, the 2-hour, 30, 15-minute, 5-minute, when they give us a buy signal, usually it's go time. And I think for pins, we also took that off the following morning. We were in and we were out. Another example would be Zillow. I think I should have a screenshot here. Here's Zillow. Daily buy signal, daily squeeze above the 21. Stage is set for a nice push. 5-minute pumps out a buy signal, the 15-minute, the 2-hour, the 4-hour. All right, you have that multi-time frame alignment. And we got the move we were looking for. So that's pretty much the template that I'm looking to see in a name like a Microsoft. 5-minute goes bullish, the 30-minute, the 1-hour. If everything starts to print that buy signal from the ground up, To me, that's the ammunition needed to trigger that push off that 21. And I think what you'll find is if you really take the time to take your indicators and study something like a move off the daily 21, but through the lens of your lower time frames, you'll kind of notice it's always the same. So if you go back and you look at this push from back here, I can already tell you before and during that push, our lower time frames are bullish. There's a 1 hour chart, right? Before and during that push, cranking out that buy signal. Here's your 30-minute chart, right? Before and during that push, you have a buy signal. So right now, I can't look at Microsoft and say the 30-minute chart and the hourly chart are aligned for a big push higher like they were back there. So really, it's as simple as, find that daily squeeze, find it near that 21, and then you're waiting for all the pretty colors to pop up. So I'm going to keep an eye on Microsoft, going to definitely keep an eye on NVIDIA. I think another interesting name here in the semi space is LRCX, which frankly I'm a little bit late to. So we're probably trying to catch that bad boy on a dip. And then Snowflake here. I need a little bit more to work with. I'm not going to bank on a 15-minute buy signal alone to trigger that huge push. If I buy it today, what am I looking for ideally immediately? Well, I'm looking for something just like that. I want to time that entry where as soon as I get long, there's a pretty damn good chance it's just going to take off immediately. Versus, hey, the squeeze looks good. I'm going to give my trade, 30, 40 days till expiration, and I'm going to let it do its thing. I'm trying to time it perfectly, catch the push, and then, we're hitting the road onto the next one. So if that's the move I'm looking for, I'm going to take my path of least resistance indicator and figure out the template for that push. What should my hourly chart look like? It should have a buy signal. I don't have a buy signal right now. All right, what about my 2-hour chart? Last time you had a 2-hour buy signal, right now we have nothing. What about the 30-minute chart? It's the same thing, like literally every time. We can't, at least in my indicator, but again, I encourage you to take your indicators and go study the same thing. Take the 1 or 2 or 3 tools you use the most often. All right, well, from a 5-minute chart, a 15-minute chart, a 30-minute and hourly, what does that look like? It's usually always the same. On my indicator, we can't find a daily squeeze that pushes off that 21 EMA without lower time frame buy signals. Like, there's just not going to be an example out there where that happens. So that tells me, all right, I have a template. I know what it all should generally look like before that huge push. So if it doesn't shape up how it should, like right now, Google does not fit that template. Never mind the fact we're under the 21. Never mind the fact we got a good flush. That's not the template. That's the template. All right, that's the ammunition we're looking for. So be a little patient here, but I think next week or so, these could be some interesting spots. And then as far as open trades that we've got right now, again, we did take off the trade in Zillow yesterday. Quick little in and out. We have the short on EOG. Our call credit spreads on that one. And then we got the call credit spreads on First Solar. And the next couple of trades here very well may be the Microsofts, the Googles, the NVIDIAs, the Snowflakes. Whatever comes across the radar. But like I mentioned earlier, you do learn a little bit more after the first dip, after that short squeeze kind of move. Now, the S&Ps might go another 43.30, 43. We might go another 50, 60 points just in a straight shot. Usually you're going to pull back a little bit, and then you look for continuation. So we might not get it, but usually that's where we're going to learn a little bit more. If we get that first reversion to the 15-minute, 30-minute, hourly 21, and the thing just totally crumbles, yeah, well, things are probably not shaping up, at least not yet, for that huge push higher. Instead, you pull back a little bit. They find some support. The structure holds. The buy signals come in. Then there's a good chance, yeah, that might have been it. So patience, my friends. But yeah, that's pretty much all I got for you. Take your indicators. If you're a fan of taking that trade out of a daily squeeze, or you're a fan of buying a pullback to a daily 21, go study that. Go study as many examples as you can. I think what you'll find is a few things. One, you'll pull the trigger on better opportunities, because you can look at something like a Google, and that decision-making process should take like 1/10 of a second. Yeah, Google, not yet. Google might fall apart from here. Right? I can avoid that headache because it's not shaping up how it should. More importantly, I think it helps make your risk management much easier. So, for example, one trade that we opened yesterday, not the sexiest, but a pretty good setup here in MasterCard. All right, so what's the template here? What are my reasons for taking the trade? Well, my reason for taking the trade is not that daily squeeze. I wish it was that simple. Let's just run the daily squeeze scan. Let's find a daily squeeze. Let's just get long. And honestly, if you think back to like the COVID market, it kind of was that easy. Yeah, I'll give it 4 weeks to expiration. I'll go catch a tan at the beach for a few weeks, and I'll probably come back and make some money. This market, I think you want to be a little bit more. We want to have a little bit more precision. So the daily squeeze is not why I'm taking the trade. The daily squeeze is why I think this could explode to the upside. My reason for taking the trade is that everything inside that daily squeeze fits the template. 4-hour chart, the 2-hour chart, the 1 hour, the 30, and the 15. Now, I don't know if MasterCard's going to work. We never know which ones are going to work, but what I do know fits the same template that Zillow fits the same template that Pinterest fit, looks just like Mara, right? You're trying to do the same thing over and over again. And while they definitely work more often than they don't, because I have these very clear reasons for taking the trade, as soon as those reasons disappear, I'm taking the trade off. So now that results in just such smaller losses. Zoom, for example, we jumped into Zoom back here because everything lined up. Daily squeeze was setting the stage. 2-hour buy signal, 1 hour. It was all those lower time frame buy signals that had us thinking, hey, this should behave like Pinterest. This should explode and it should go for it now. A couple of days later, we're pulling back. We're losing all of our lower time frame buy signals. We actually started getting a couple of lower time frame sell signals. At that point, it was no longer the template. Right? At that point, it was no longer doing what it should do. So then you don't get concerned with what happens next. What if I get shaken out? What if it explodes? You keep that cash to work as long as it's at that high probability moment in time. As soon as you lose those triggers, as soon as you lose that alignment, take the trade off. Like we didn't even hang out to find out if Zoom could hold that daily 21. We don't care if it can hold that 21 EMA, because right now it ain't looking like that. So that's my advice to you. You can do that with my indicators. You can do it with really whatever your indicators of choice are. But as far as that pattern recognition, I think for most of us, that's kind of what we're after. But all right, guys, enough gabbing for me. Let me get going to the chat here and see what you got. Joseph, thoughts on AMD? Yeah. On a personal note, not my best stuff here in AMD. The old greedy habits kind of got the best of me on this one. So long story short, I had shorted it last week, looking for a flush to the daily 50. I got within like $1.80 and didn't take the profits off the table. And I did that with a trade where I really couldn't afford to get cute. I had the 105 out the money puts that expire this Friday. And y'all know how that goes. Your puts might be up 100, 200% in your favor. If you're not getting down there to 105, they're going to expire worthless. So yeah, I had 3 chances. Friday morning while I was driving to Chicago. So I definitely could have paid for the tolls and the gas. Again on Monday morning. And again yesterday. So I ended up taking the puts off for a bit of a loss yesterday. But that is neither here nor there. We'll have to see how the semis kind of shake out today. You got NVIDIA open up around, at least based on what I'm seeing, NVIDIA's going to open up down about $10, $15. AMD's down about $3. I would think the first actual physical test of the 50, it should hold. Now, am I going to buy it blindly at the 50? No. What I can do, though, is instead of that 21 EMA being the launching pad, I can make that 50 SMA the launching pad. And what I would want to look for that big push off the 50 is a 5-minute buy signal coming in, a 15-minute buy signal. I mean, that's kind of the beauty of it. If you know, like the back of your hand, what your indicator should look like before and during a big push, you can look for that template pretty much at any level. If we're going to rally from 105 back to 115, my lower time frames, they're going to look very similar to what they look like if we're pushing off of the 21 EMA. It's just as simple as 5-minute, 15-minute, 30-minute. Their structure turns bullish, their momentum turns bullish, and that's kind of the fuel needed for a push off of really any given level. So something to look for there. Dave, does NXPI look better than LRCX? We're about to find out. Better might be a subjective term. Now, LRCX has a daily squeeze. NXPI does not. However, really kind of started this whole push for LRCX. And for those of you in my mastery, I still can't freaking believe that this one's going to sting for a while. We bought it right here. We took our profits right there. Because at that point, nothing was actually breaking out in the market. And then everyone and their mama starts breaking out. But a huge part of that push was that weekly squeeze that fired long back in early May. So on NXPI, while you don't have a daily squeeze, you do have a weekly. Earnings on the 24th. I don't think one is better than the other. And frankly, my expectation would be they should all kind of move together. I would give LRCX a bonus point because it has a daily squeeze, but I would give NXPI a bonus point because it has a weekly squeeze. But I think the real key here in the here and the now, for each of them, we try to buy them maybe a little bit lower. If you don't already have a position, picking up some LRCX around 630, 620, to me, I think is a lot more ideal than picking it up around 650. And then I would look at NXPI and kind of say the same thing. Where if I bought it a couple of days ago, then I'm hoping this thing never looks back. But since I missed the first bus, 195, 192, kind of sweetens the pot a little bit. And then Scott wants to look at some Netflix. What I would look for at that 21 EMA is the same thing that got us in back here at that 21 EMA. Now, I'll admit back here was a little bit juicier. You had a daily squeeze, which we don't have right now. You had a daily buy signal, which we don't have right now. And if you remember, we had that nested squeeze set up. It wasn't just your daily chart, it was your daily chart, the 1 hour, the 4 hour, the 2-day time frame, the 3-day time frame, the weekly time frame. So I don't think it's as locked and loaded with squeezes as it was back there. But nonetheless, I do think you're looking for 450 here on Netflix. And then potentially over time a little bit higher. So we're at the spot where that might be all she wrote as far as the selling pressure. From here, maybe Netflix kind of spends a few days catching its breath. But I already know what I got to look for. I don't have that just yet. Hour bear squeeze. I have a 1 hour bear squeeze. So I would love to trade this. And my assumption is if the market continues to be strong into the summer, this continues to be a really good name to trade. And you could buy it here and say, all right, I'm going to give my trade plenty of time. I'll let it trade sideways for a bit. My preference is, hey, is it all lined up? No, not yet. All right, I'm going to hold off. I don't need my cash just kind of sitting there collecting dust for a few days. But yeah, at any point, the lower time frames on Netflix look like any of these other examples. Lower time frames look like MasterCard's lower time frames. I'm jumping right back in. And in my small account here, I might be looking to do two different ways you could look at it. Keep it simple, do some Delta 70 in the money calls, maybe some put credit spreads. The other kind of thinking, at least in my situation, I'm kind of playing with profits here as far as this short-term trend. So in this small account, Netflix has been my biggest winner. So out of the $20,000+ of profit, I think I've made like 7,000 of that out of Netflix. So 30-40%, whatever that might be. So as far as just playing with some profits, even some cheap 450 calls, give them plenty of time, but some cheap 450s could be interesting. But we'll cross that bridge when we get there. And then DraftKings. I already like it. Right, even before the chart loads, if I can just see this and that, I already kind of got a sense of whether or not I'm going to like it. Yeah, this is solid. It's a little bit better if you have a daily buy signal, but that could be the ammunition you're looking for. And where you do have a squeeze in the buy signal is over here on your 2-day chart. The 2-day time frame and your 2-hour time frame. Yeah, I gotta like it. And I think last couple of weeks here, you're seeing some better price action out of these. I would call them the crap stocks, but your Zillows, your Pinterests, like things of that nature, they are doing a little bit better as of late. Yeah, I like it. Not a terrible candidate at all. I'm actually gonna slap that on the watch list here real quick. Not bad at all. Samaj, what do I think of PLTR? What's up, Terry? What's up, Briggs? All right, PLTR. Terry, I always love seeing you post your winning trades on Facebook. Always puts a little smile on my face. So Palantir. We're at the launching pad. We have a daily squeeze. And from here, you're playing the probabilities game, right? Is there a stronger probability that that daily squeeze fires to the upside or to the downside? Above the 21, with buy signals across your lower time frames, that usually bodes well for the squeeze to fire long. The opposite would be Solar Edge, to be shorted last week. That daily squeeze under the 21, crapload of sell signals that usually bodes well for a flush lower. So I think you take that in consideration. One thing that Henry teaches a lot in the options room: take note of the move that led you here. All right, we got a brand new daily squeeze. What took us into this daily squeeze? Was it a huge flush lower? Was it a big push higher? As far as shorter term trend, this all does lean a little bit more bullish. And this is really your first kind of break in the action. Huge push, first pullback, everything kind of catching a breather here. From here, the 1 hour, 30, 15 minute, 5 minute, they start shaping up. Even better, they start throwing out some squeezes. That could take you right back towards the highs here. So I think another solid one there. All right, guys, a quick look here at the futures, and then I will make way for the next presenter. See what we got here in the futures. So one thing I did notice yesterday, we kind of ran directly towards the hourly 200 in that typical kind of spastic short squeeze fashion. So the dip here into the open does make, to me, a lot of sense. Admittedly, we're not in the market that always makes sense, but now we get to learn a little bit more. So actually, the futures here could be a great thing to watch today, because that's kind of the pattern that I'm talking to you about. Everyone and their mama and their mama's boyfriend getting short. Here comes the short squeeze. That first pullback fails. All right, it's not the makings of a trend. A trend means you pull back, you hold, you put in a higher low, then you go on to make a higher high. So I actually like the hourly chart here on the NQ. As far as a good gauge whether or not, does this short squeeze, pull back, find support, then turn the corner, or like back here, and a little bit like back here, and a little bit like back here, do we drop the ball again? And being that the S&Ps and the Qs are kind of the mothership of it all, if that begins to break down again, just means it might not be time just yet. to go pursue that Microsoft trade, that Nvidia trade, or that Netflix trade. Those trades work so much better when you got the market giving you some wind at your back. So even if you don't trade the futures, just in terms of that concept, how that first pullback after the short squeeze, that's a pretty good spot to watch there. And then we'll go check the S&P futures. The S's and the P's. This also ran right towards the hourly 200. Yeah, this is kind of perfect, guys. First push. Big short squeeze right into huge resistance. First back test. If we're going to see this turn to an hourly uptrend, this is where we should hold. Should continue higher and eventually break above that 200. You break the hourly 21, you break 4,400, you break the hourly 50. Maybe pump the brakes a little bit on trying to get long a few of these names that we talked about this morning. I think there's a good chance we're going to get long all of them eventually, but we're trying to nail that timing. So actually for today, it's a question of the hourly squeeze. If the hourly squeeze here for the futures fires to the upside, we might take out yesterday's highs, and we might be back into an hourly uptrend. Right, being back in an hourly uptrend should give us continuation of that daily trend. Now, think of it through the lens of your lower time frames. 1 hour charts in an uptrend, 1 hour charts in a downtrend, 1 hour chart stabilizes, goes back into an uptrend. So things to watch, guys. But as always, I appreciate your time this morning. Hope you found it helpful, and I'll be back with y'all on Monday morning of next week for a little bit more pre-market fun. So trade well today, be disciplined, and I'll talk to y'all soon. Adios, guys.